weekly bias and how you can formulate your opinions on the market for the upcoming weeks. Now, I find this to be, you can sort of have an idea of where price is moving over a longer time frame on FX than personally on crypto. For me, I can only really calculate the next week or two in crypto, whereas in FX I can calculate months ahead. But that's just simply because of how long it takes to move price up. But it works in both scenarios, so don't worry. Now I'm going to be using EURUSD because I've been following this very, very closely for quite some time. So I've become very well known to it, and I have a lot of valuable information. So first of all, we need to talk about liquidity, guys. Buy side, sell side. Look, so let's imagine I don't have premium discount yet, so I don't have replay mode. Keep meaning to buy it, but just keeps slipping out of my mind. I don't actually really use trading view as my main thing, but anyway, so let's say we're about here, right? Price is moving up, and you're let's just say you're the average trader, liquidity trader, and you see this right here, and price is just rejected off it, right? Everyone and their granny is going to have their short positions stops up here, right? Because you're looking at this, we've just rejected, and you're looking at this saying, hey, I'm gonna put my stop loss up here, let's go short. And what you know happens? Because when they go short, if their stop loss is hit, they are forced to buy back the asset, and when they buy back the asset, that allows banks and whales to sell and go short. Would you look what happens? Boom, lick grab, right? So now we're here in the chart. We've now just positioned ourselves short, and we've made a crazy return here because we had in our bias, we marked out that previous buy side liquidity. We marked that out in our chart. It's happened, and now let's say we've taken profit in around here because we also used the FEGs and imbalances. We've called that there, and we know that's a big imbalance that's just been filled there. So we can say perhaps price may reverse, so let's exit. Now what are we going to look on the chart next? We're going to start looking for other FEGs. So we've got here will be our main zone, right? So let's see what happens. Price moves up, and even if you get sold into the FEG here, you'd be happy. And again, say you took profits on your long position that you placed down here, you then mark out your previous high of about here. Sorry. Of course, price rises, takes it on several occasions, and then moves down. And these are crazy moves. That's like 4%. That's crazy in FX. So it doesn't look particularly much, but it is a lot. So then again, what happens? You start to grind back up the gears. You probably wouldn't be able to position yourself like, in my opinion, there wouldn't be a whole lot of reasoning except perhaps you could have seen, oh, we're setting up for out to create a lower high, we're sitting on the 200 moving average, it could be a nice position. Same with here, you could have slapped on the traders reality indicator, you could have gone long after, especially when you saw so many taps. So you maybe could have gone long there. Short, you probably would have got once you saw several wicks to the high, 3 to the high and down, right? You might have gone long here. It's kind of a tough one. You probably wouldn't have gone short here. Maybe you would have with the moving average. No, I wouldn't have personally. But now we're talking here. So this is a major move. This is insane. This is a 4% move in a matter of 4 or 5 days. This is unheard of on FX. You don't see a whole lot of those candles. Maybe here, but these are sort of rare. Like this is rare right here. Like you don't see move. That's the biggest buys I've seen in a long time here. You won't see too many big candles like that within the past year. So obviously we're creating big imbalances. You'll have FEGs marked in here. And how would you have predicted this top? Well, in this instance, we're going to have to go into the 4-minute time frame, or the 4 hour. And you're going to wait for price to consolidate. You're not going to want to short any of this. You'd be an absolute idiot to. You just have been liquidated. You wait. And this is what you wait for. You will have marked out your buy and sell side liquidity, which would have been in and around here. And you wouldn't notice that buy side got taken first. And now you're asking yourself, hey, what's next? We just took buy side. What are we doing now? So we vaguely took sell side, came back up, took some more, came back up. Now, you would know that we've just pumped 4% in a matter of days. Unheard of. We've just had a crazy liquidity grab here of about 30 pips. About 25. You know that it's time, or there's a high likelihood that we start moving down, and it's now time to start marking off FEGs. You head on to the daily time frame, and you open up your FEG indicator, or you mark them in. And there you go. We take 1, 2, 3. You can now start to take profits. Now it's gonna be hard because I can't tell the future, but I'd be very interested as to whether this is our actual bottom here. But you could safely take profits here, knowing that we've taken all these FEGs. Traders reality indicator is not going to help us a whole lot here, although it could indicate we could move perhaps lower. Right. So yeah, that's how I've analyzed this EURUSD chart. Something to note as well, I'll be looking for, this candle is very interesting to me. Maybe if we have take last week's low and start to reverse back up into here. But who knows? It's something I'd have marked in the chart. It's something I'd have an eye on, and it would not impact my buys hugely, but I would certainly keep an eye out for it. Now I hope this helped you guys, and you can use it in your trading. And even if you didn't fully understand it, just listening to someone analyze the charts, and from a technical standpoint like that will allow the information to sink in over time.